John, I want to ask your opinion on what do you think of ESG investing. So you just said it's like the right thing happening at the right time. Why is that?
Well, it's funny. Markets evolve. And most analysts, when they analyzed the company a few decades ago, said, well, the most important thing for a company is just to make money for the shareholders. In fact, one former Secretary of the Treasury said that is the first and only priority is if you're in business, you've got to make money for your shareholders. Then people said, well, how about your customers? Shouldn't they count? And then how about your employees? Shouldn't they count? And Lou Gerstner, who was a friend and classmate of mine at Harvard Business School, when he took over IBM was going down the tubes. John Akers, the former chairman, had kind of run it into the ground. And Lou Gerstner said, hey, time out, stop. Let's ask our customers what they need and provide it. Let's not try to sell them what we want to produce. And then he turned around and he said, okay, let's get the help of our employees. Let's get them involved in that decision-making process. Let's respect their decisions and involve them. And yes, by all means, we want to protect and enhance our shareholders. But then he found something else, the fourth leg of the stool. And it's something that many companies had overlooked until today. And this is what ESG is all about. And that is society. Society is extremely important. First of all, you have to be honest. You have to pay your taxes. You have to play by the rules or you'll be out of business. But the other thing is, if you can set up some sort of program that benefits the community and you get your shareholders and your employees involved with that, everybody takes pride in that. And I'll give you an example. Sir John Brown, who's the head of British Petroleum, he set up the fourth leg, social responsibility. And he publicized it. And as you say, everything is about marketing. He marketed this thing. We're a good social company. And as a result of this, they did a study that BP's share price was 5% higher than any of its direct competitors. And that 5% turned into more than $1 billion of market cap. So the four legs of the stool today, particularly the fourth one, having a good social conscience and involving your employees and your community really pays off in the bottom line.
Guyan, what's your thought on the ESG investing?
Yes, sure. So I would say ESG is a revolution going on in the investment industry, and as John said, it's at the right place at the right time. So yeah, before that, the management's job is to maximize shareholder interest, and now we're thinking about not only shareholder, the stakeholder, environment, social, and the governance. And it's good. The revolution is starting from the top, from the asset owners, from pension fund, from endowment, from family office. They want to do that. And that trickle down to our manager level. And we want to think about ESG when we make investment. Then from manager level, and then trickle down to the corporate management level. So and that couple challenge I think it's facing ESG and to implement ESG into a daily investment. It's kind of lacking of kind of data set. So we are using a data vendor called Sustainalytics. So we use, but they only have like 60% of the Russell 3000 have ESG score. Rest they don't have it. And the old when we do investment, it was easy if you think about fundamental research of company. You think about PE, EV, over EBITDA, all kinds of these metrics fit to all companies. But ESG metrics does not fit to all. So when we are talking about a software company, they don't have much to do with the environment, and but they have a lot of things with to do with how they treat user data, how they are compliant with GDPR, and so so I would say for the different company, there's a different tilt inside of the ESG, and and I would say there's a tons of business opportunity there to for data providers, for software and analytics companies to come up with solutions to kind of help portfolio managers to compare apple with orange. How should we adjust oil and gas company versus a software company? How can we compare their ESG scores? Of course, it's totally different, but there's a huge business opportunity there. So for us, so I would say from the hedge fund or fund manager level, there are two kinds of ESG investors. One is like they start as an ESG fund. So we did not start as an ESG fund back in 2017. We started as a long-short equity fund. And then when we get more knowledge about ESG, I feel it's the right thing to do. So we add the ESG tilt into our investment process. We look at the Sustainalytics scores, but sometimes we feel it's not great by only looking at scores, but there are a lot of work need to be done. So that's my 2 cents.
Well, I'd like to comment on what Guyan said, because you pointed out something that's extremely important. In ESG investing, there are not a lot of people that even know what the term means. And so therefore is not a lot of people who know how to analyze a company for ESG. And the analogy is that during the gold rush, there were a lot of gold miners who didn't make any money. They lost money and they died. But there were a lot of people who made the pickaxes and who made the jeans who made a lot of money. And
Yeah.
they were the ones, just like in this ESG investing, a company that is very good at analytics, as well as understanding what ESG means and separating the companies that are just saying we're an ESG company just to be in the business versus ones that really know what they're doing is extremely important. So I think you put your finger on it. It's a very new field. A lot of people don't understand it, but the people who can help those investors analyze what is a true ESG company and a winner will be the ones who will win.
Yeah, exactly. I think it's like as a management professor used to say, if you cannot measure it, you cannot manage it. So the tools to measure ESG, it's very limited for a portfolio manager at this point of time. The data vendor we use, it's good, but not great. Yeah.
Mm-hmm.
Another question to you guys. So report published in July saying that ESG has a 35.3 trillion US dollars in asset under management during 2020 last year. And the trend looks like it's not showing any sign of slowing down at this moment. How much bigger can this investment asset grow?
Bubbles can grow to large sizes, but I think there's a lot of danger there. There are a lot of, for example, the largest sovereign wealth fund is Norway, and Norway will not invest in third-party oil companies anymore. And the fact that they're getting out of it is a bellwether for me, is to say, well, there's a lot of danger in trying to find too many ESG companies. And some of the largest, pension funds are saying, let's get into the business of investing in ESG companies. But once again, you really have to do your homework. But a lot of people are going to lose the money. So when you say, how large will it get? Well, double it. And who knows whether double it is right? I don't know. But I can know that a lot of people are going to lose a lot of money before it's over. But that doesn't mean you shouldn't be in the market. But just like Guyan says, you should do your homework, know the industry, and know what their program is for ESG. If they have a defined program like British Petroleum, and they know what they're doing, they involve the employees, they let their shareholders know about it, then people will invest in their company, even though the ESG element is just one part of it.
Yeah, Guyan, your thought on this?
Yeah, I would say it's difficult to speculate how big it can be.
Right.
It depends on the asset owners, like pension fund, endowment, like the adoption rate inside that small industry, and how much percent of their asset they want it to be ESG. So as John said, it's a great time for young students and the professionals to learn more about ESG, to analyze a company from the ESG perspective. So it's going to be a huge market.
I think the Guyan has a good point there. You have to be able to analyze and measure impact. You know, what if somebody's in ESG, is that just part of their company, like the fourth leg of the stool, or is it the entire company? And if it's the entire company, how do you manage the results? It's like a foundation. How do you manage the results of the foundation? And there are analytical tools for doing that. And you better learn them, because otherwise, if you just sort of say, well, I want to invest in an ESG company, throw money at it, you can lose that money.
Yeah.
The problem is that a lot of companies think, oh, we've got to be an ESG company. So they just say a few nice things and they say, okay, now we're an ESG company. So it really gets back into a system for analyzing and defining what ESG really means and how that company complies. And then you're absolutely right. More and more companies, just like they have to disclose everything from the salary level to how many women have senior positions, what the relative compensation is for people. These things are going to be more and more disclosed, and the large pension funds are not going to invest in a company that doesn't have that disclosure.
Yeah, absolutely. John, you said watch out where the money is flowing to, right? But at the same time, you also see money flooding to tobacco, marijuana, other energy stocks as well. I mean, like even Warren Buffett is criticized for not caring enough about climate change. How much do you think that investors on Wall Street really care about moral issues?
Well, it's like here in the United States, you have to say how many Americans really care about what's going on outside of the United States. And I think, unfortunately, very few. And so I think that therefore the bulk of the retail investors, how much do they really care about ESG? I think probably very little. I hate to say it, but it's just like, as I say, I wish most of my fellow Americans worried more about what's going on in the world and what's going on in climate change than they do. But unfortunately, that's not necessarily the way most Americans think.
All right, Guyan, do you have anything to add for this question? Do you really care?
Oh yeah, we do care about that. We care about it because two reasons. One is that's a good thing to do, and that's like those are good values to instill into the society, and that trickle down from the capital markets to corporate behaviors. And on the other side, because a lot of people believe ESG works, even though let's take one step back. Whether it works or not, we say I don't know. That even a lot of believe something works, and then it works. So it's kind of consensus is like John said, you follow the money. It's a kind of consensus itself. It's valuable. So and you see half of the money managed in Europe is ESG compliant. One third in US is compliant, and then the trend is there. So that's forced our portfolio manager to learn about ESG. So A, it's a good thing to do. B, it's a consensus there.
Yeah,
as Guyan said, the word trend is very important. Trend, momentum. If you see where people are putting their money, you want to be in on that trend. You want to be able to get off, but follow the trends, follow what other people are doing, because that's where the money is going to be made temporarily.